Thanks for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. And you know what? It's Thursday. What does Thursday mean? Well, that means we get our weekly export sales numbers. And here to talk about it, we have Brian Hoops with us. He is with Midwest Market Solutions, and he is based in Springfield, Missouri, where I'm sure you've been keeping an eye on the weather as well here, Brian. Just real quickly, can you give us an update on what took place in the southwestern Corn Belt yesterday?
Lots of rain so far, Marlon. It's we've had probably over 2.5, almost 3 inches, and that was the most rain in the last 24 hours. We've had more rain in that 24-hour period than all of March and April combined. So it was getting pretty dry. A lot of rain, a little bit of wind, not anything real serious, but everybody's grass is greening up, looking really nice. And a lot of these wheat fields in the Joplin area, there's a tremendous amount of wheat grown there. They look tremendous. That is going to be kind of a garden spot as far as the winter wheat crop. And even out towards Wichita, there's a lot of good-looking crops. And that area of Kansas and southwest Missouri, you have some really good-looking crops. Corn is off and running, and you can easily row it. So it's off to a good start in that area.
All right. Well, that sounds good. I'm glad to hear that. And the wheat in Joplin on the Missouri side there, is that still the hard red winter?
Hard red winter, yep,
okay.
Absolutely. And it's got a head on it. So getting some rain at this time of the year, perfect, great. It'll really grow and sprout. So.
Okay, now let's settle in here and talk about these weekly export sales numbers that just came out. Let's take a quick look at what the totals are. And what I do is I combine the old crop and the new crop sales together. And if there happens to be a reduction in there, I'll do the negative numbers. Let's take a look here at what we had for this past week. Well, corn sales, 340,400 tons. Soybeans, only 112,300. Soy meal, a fairly healthy 266,800. Soy oil barely registered with 300 tons, and the wheat 359,900. So what'd you think of those numbers?
Even when you combine these marketing years, they're still terrible. So any way you want to look at it.
Okay.
So, yeah, there's really not much good to say. To kind of put things in perspective, over the last 4 weeks, corn sales have averaged only 6 million bushels a week. Soybean sales about 4.5 million. So, it just kind of tells you that the trend has been for much slower sales of both corn and soybeans. The wheat marketing year is coming to an end. So that 1 million bushel that we sold this last week, it's about where you need to be to hit the USDA forecast. So there's really no reason for them to change that in tomorrow's report. And even when you look at the new crop marketing years separately, corn, soybeans, and wheat are all way behind last year's pace, which was pretty dismal. So we're off to a real terrible start. There was a private sale this morning of soybeans, 132,000 to an unknown destination. So, it's a help, but we have a big gap between where we were at this time a year ago and where we are today. And I guess I should point out that there was a cancellation of corn by China that did not show up in today's report. That's going to show up next week, and that's going to make these sales look dismal once again.
Great. All right, wonderful. Let's take a look at our overnight trade here. Let's go to the corn board. Our quotes are from bar chart. We finished up. And these actually closed after the weekly export sales numbers came out. July corn closed 4 lower at $5.90. December was down 4.5 cents here this morning. On the soybeans, now this did not take into account that overnight sale that Brian was talking about to unknown destinations. So we'll see how the trade reacts on the open. But anyway, based on the weekly export sales numbers, we had July soybeans closing 12 lower at $13.92. November down 9 3/4 at $12.41. And then over on the wheat, the wheat numbers weren't anything stellar. You had July Chicago wheat down 4 1/4 cents this morning, or overnight, I should say. You had the Kansas City wheat on July down 5 at $8.50 1/4. And Minneapolis spring wheat had July closing 5 3/4 lower at $8.43 3/4. So plenty of bearishness to go around in the overnight trade as everybody's getting kind of positioned ahead of the WASDE report tomorrow. We'll come back in a moment. We had some beef and pork numbers that were reported on sale last week. How'd they do? We'll find out in just a moment. We're talking with Brian Hoops, and let's take a look at the beef and pork export sales numbers that just came out. Well, for last week, we had the beef coming in at 16,600 tons this time around, and we had the pork number at exactly, and I do mean exactly, 30,000 tons that were sold last week. That beef number was down 18% from the week before. The pork number, even though respectable, was down 39% from the previous week. Brian, your take on these?
Well, these are pretty routine. They're not terrible. They're not great numbers, but kind of about in the middle of the range of where we have been here recently. So can't say that these are real helpful or really going to hurt either one of these markets. I think the cattle market is probably going to be more focused on some of that cash trade that developed very late in the trading session yesterday. We saw a sell-off in the futures. There was some rumors of 169, 170 being traded in the plains, and those were confirmed overnight. So that's probably going to be a drag on those June futures early this morning. It's probably a basis play. There's probably a very strong basis from some of these feedlots. They're making cash sales, getting out of any hedges there. That is putting a little pressure against the futures because that is down several dollars from last week. And a disappointment to the trade. Yesterday morning, we were looking at offers by the feedlots of 173 and 174. And so then to take 169, 170 is certainly a disappointment.
Yeah, well, we wondered how that spread was going to correct itself, where you had the futures so much over, the cash so much over the futures trade. In fact, let's take a look at where we wrapped up yesterday on that live cattle board. Just for a point of reference today, you had the June contract yesterday down 92 cents at 163 even, so that's still a long ways away from that 169 Brian was talking about. If you look at the feeder cattle market yesterday, they fell on hard times. We had the August contract down 97 cents at 225.15. But you go beyond that, and everything else in those deferred contracts were over $1 weaker yesterday on the close. And then on the lean hogs, well, they tried and failed to rally. They had follow through early in the day after the big gains, the big reversal the day before that, and it just couldn't hold. They couldn't get it to stick, and we closed 22 lower on the June at 84.17. So we'll see if they can regroup today or not. It's a tough battle. Brian, thanks for all the information. Good to hear from you again. I appreciate that. And take care out there. Brian Hoops of Midwest Market Solutions with us here on a Thursday morning.